All four major U.S. stock benchmarks rallied to records in Tuesday's trading, with the Dow Jones Industrial Average topping 19,000 for the first time. However, tech stocks haven't been part of the rally, last peaking October 24th, 2 weeks before the election, when they saw highs not seen since 2000. So, as investors grow more confident the U.S. economy can withstand a Federal Reserve rate hike and adjust to the surprise election of Donald Trump, what does it mean for tech M&A and IPOs in the new year? Here with me now, Carter Mack, president of JMP Group. Carter, great to have you back here on the show.
Thank you, Emily.
So the markets have been on a roll, but tech has not been part of the rally. Why is that?
It's hard to say. I mean, you're right. The markets have been up, and small caps in particular. I think the Russell 2000 hit a record, up 11% since the election. I think a lot of the bigger tech companies are multinational in scale, and I think that, Trump's policies, generally anti-trade, those kinds of things are really affecting people's viewpoints of the bigger companies, the Amazons, the Microsofts, the IBMs. And that's, since those are the largest market cap companies, affecting the whole indice.
So Facebook, Google, Netflix, for example, all down since the election.
Right.
Do you think that will keep up, or that once we start to see more certainty around Trump's policies, that could change?
I think it can change. I think that the tech sector will probably join this rally at some point. I think, we're going to talk a little bit about IPOs. I think the backdrop for IPOs is very good. I think people are looking for high growth companies in the market today, and I think, we see a lot of growth in technology, especially in cloud-based software platforms and other companies that don't necessarily have as big an impact from, some of these global economic issues.
So 2015, 2016, pretty dry years for tech IPOs. And now we have two political surprises with the election of Donald Trump and Brexit. So companies that were perhaps waiting for some more certainty may not have gotten it. What does that mean for 2017 when it comes to IPOs?
Well, I was saying before the election that the backdrop for IPOs has been really good, actually, over the last 6 months. And that's, we've had low volatility in the market. We've had 5 months of inflows into equity funds. We've had generally good performance. And in the IPO sector, for the IPOs that have come out in 2016, the average IPO is up about 35%. In technology, the average IPO is up about 45%. So people are making money and outsized returns by betting on new companies in the IPO market. In October and the couple weeks before the election, we really saw an uptick in IPO activity. But as the election got closer, people got more uncertain, and that's tailed off, obviously. I do think that we are set up for a much more robust IPO market in 2017.
So how many more IPOs?
Well, it's hard to say, but the backlog of confidentially filed deals has gone up significantly. And
Snapchat, for example, filed before the election.
That's right. And, there was a deal yesterday, Optiv, in the cybersecurity space that filed. There's a lot of companies that are filed confidentially. I just know from JMP Securities as an active underwriter in the technology and biotech IPO markets, we saw a number of companies select underwriters and get on file confidentially in the fall. And so we know that there's a lot of companies lining up to go public in the first quarter of 2017.
So what about M&A? Will companies get more acquisitive? Who, why?
The M&A backdrop has been good. I mean, we focus in the middle market, and middle market M&A has been very good. Our own M&A advisory business is up dramatically this year. We focus in tech and healthcare and financial services and real estate. And we've seen a steady increase in M&A activity. We don't really see that slowing down. A lot of the companies we deal with will benefit, at least from what we're hearing the policies will be. Lower regulation, lower tax rates. Companies that are more domestically focused, so don't have some of the issues around, stronger dollar and trade policy. So, we think it's so far generally positive.
David Kirkpatrick, one of our Bloomberg contributing editors, suggested yesterday that bigger is safer, or potentially safer, under President-elect Trump. Would you agree with that?
I don't know if I'd agree with that. I mean, the market doesn't necessarily agree with that right now. I mean, as I said, the Russell 2000 is up 11%. That's the area, the small cap part of the market has been the part of the market that's been rallying. And I think, there's more uncertainty for large global companies that have businesses, in Asia and across the world with, the potential for, trade wars and other negative consequences.
Any specific sectors within tech that you would single out where you expect to see activity?
Well, as I said, we're seeing a lot of activity in cloud-based software. That's an area that we cover, and we've seen, recent deals. We were on the Coupa IPO, which performed quite well.